Have you ever noticed that you can feel poor while earning a salary that, on paper, should make you feel successful? It's a strange, quiet anxiety that haunts the middle class across the United States and Europe. You've done everything right. You studied, you landed a corporate job, and your LinkedIn profile looks exactly how it's supposed to. Yet, at the end of the month, after the digital dust settles in your banking app, there's almost nothing left. You aren't overspending on champagne or yachts. You're just paying for your life in installments. We have entered the era of the monthly payment, a world where we no longer ask, how much does this cost? But rather, can I afford the monthly payment? This subtle shift in vocabulary is perhaps the most expensive mistake of the modern age. It is a mechanism that allows us to live a life we haven't earned yet, and in doing so, we are quietly trading our future freedom for a present-day illusion. Imagine a young professional. Let's call him Mark. Mark earns $5,000 a month after tax. In many parts of the U.S. or Western Europe, this is a solid, respectable income. It's the kind of money that should allow for a comfortable life and a growing investment portfolio. But Mark's life is structured around payments. First, there's a rent. In a desirable urban area, that's $1,800. Then comes a car. Mark doesn't drive a supercar. He drives a sensible, mid-range SUV. But because he financed it, that's $600 a month. Add the insurance and fuel, and the car is costing him nearly $900 before it even moves. Then we have the smaller, invisible payments. The $50 smartphone plan. The $120 student loan installment. The $15 gym membership he rarely uses. The $60 for various streaming services and cloud storage. Then comes a credit card. Mark doesn't have debt in the traditional sense. He just uses a card for travel or dinners and pays a minimum plus a little extra. That's another $300 a month. By the time Mark has paid for his groceries and a few social outings, he is left with maybe $200. To the outside world, Mark is thriving. He drives a new car, wears nice clothes, and lives in a glass-fronted apartment building. But mathematically, Mark is a slave. He is one HR meeting or one restructuring away from total insolvency. He isn't building wealth. He is merely managing his cash flow to ensure he can keep his subscriptions active for another 30 days. The financial industry has spent decades perfecting the art of making the unaffordable feel accessible. They realize that if they told you a car costs $45,000, you might hesitate. You might look at your savings account and realize you don't have $45,000. But if they tell you the car is only $599 a month, your brain processes that information differently. You look at your monthly surplus and think, I can squeeze that in. This is the payment mentality. It's a psychological blind spot where we focus on the flow of money rather than the total cost. When you buy a car on a 72-month loan, you aren't just buying a vehicle. You are signing away 10% of your labor for the next 6 years. You are deciding today that your future self won't mind working 40 hours a month just to pay for the metal box sitting in the driveway of the past self. We see this now with buy now, pay later services integrated into almost every online checkout. Whether it's a pair of shoes or a laptop, the total price is hidden behind 4 easy installments. It feels like a discount, but it's actually a tax on your future. The math of these small leaks is devastating. If Mark took that $600 car payment and the $300 credit card payment, $900 total, and invested it in a simple low-cost index fund in 30 years, that money would likely grow to over $1.5 million. The sensible SUV isn't just costing Mark $600 a month. It's costing him $1 million retirement. This is the opportunity cost of the monthly payment. We aren't just paying interest. We are paying away our ability to let time work for us. Why do we do this? Why do intelligent, rational people trap themselves in a cycle of payments? The answer lies in the conflict between status and wealth. Wealth is what you don't see. It's the money in the brokerage account, the paid-off real estate, the liquid cash. Status, however, is everything you do see. In the modern West, we have conflated the two. We assume that because someone has the monthly payment for a Porsche, they are wealthy. In reality, the Porsche is often the very thing preventing them from becoming wealthy. There is a psychological phenomenon known as lifestyle creep. As our income rises, our floor for what we consider normal rises with it. When Mark gets a $500 a month raise, he doesn't see it as $500 of freedom. He sees it as the ability to afford a more expensive apartment or a better lease. We are running on a hedonic treadmill. We work harder to earn more, so we can afford higher monthly payments, which requires us to work even harder. We are terrified of looking average or behind, so we use financing to bridge the gap between our actual net worth and the image we want to project. The result is a society of high-income poor people. People who earn $150,000 a year, but are just as stressed about their bills as someone earning $40,000. The stress isn't caused by a lack of income. It's caused by a lack of margin. So, how do the financially intelligent break this cycle? It isn't through complex trading strategies or hustling harder. It's through a fundamental shift in how they view money. The financially intelligent person views every dollar as a worker. Their goal is to put as many of those workers to work as possible so that one day the workers can support them. When a financially intelligent person looks at a monthly payment, they see a liability. They understand that every time they sign a financing agreement, they are selling a piece of their future freedom. They prefer the temporary discomfort of driving an older car or living in a smaller home if it means they own 100% of their income. They understand the power of the margin. If you earn $5,000 and your life costs $3,000, you have $2,000 of power every single month. That $2,000 is your ticket out of the rat race. But if you earn $10,000 and your life costs $9,800 because of your mortgage, car leases, and private school fees, you have no power. You are fragile. The goal isn't to live a life of deprivation. It's to live a life of intention. It's about deciding that the feeling of a $0 balance on your credit card and a growing investment account is more satisfying than the temporary dopamine hit of a new purchase. The monthly payment trap is so effective because it is invisible. It doesn't look like a crisis. It looks like a normal life. It looks like the lives of your neighbors, your colleagues, and your friends. But normal in the modern world is being broke, stressed, and dependent on a paycheck that is already spent before it arrives. Breaking free requires a certain level of intellectual honesty. It requires looking at your bank statement and admitting that some of the things you own actually own you. It requires the courage to be boring in a world obsessed with the appearance of success. You don't need a higher salary to start. You just need to stop giving your current salary away to banks and financing companies in exchange for things that lose value the moment you take them home. Real wealth isn't about what you can buy. It's about what you can endure. It's about the peace of mind that comes from knowing that if you didn't want to work tomorrow, you wouldn't have to. And that peace of mind is something a monthly payment can never provide. If this perspective on money and psychology resonated with you, consider subscribing. We'll be exploring more of these hidden financial traps in the coming weeks. Thank you for watching.